Welcome to Common Sense Investing. My name is Cameron, and today I am here talking about Thermal Energy International. Now, this is going to be more than just their earnings call, which they released earlier today at like 5:30 a.m. Pacific time. That was pretty early for a lot of people, so I recorded it. Today, I'm going to show you a quick 1-minute video about the CEO introducing Thermal Energy International to new investors. A little 15-second disclaimer because that's a legally smart thing to do. And then I will show you the earnings call. Do not forget, during the earnings call, I will be in the chat. So hop on over to the live chat. Talk with me about their earnings. I'll be making notes on their earnings, so I hope to see you there. And then after their earnings, if you stick around, I'm going to give my opinion. I'm going to look at a couple of the numbers, and then I'll stick around to answer any questions. So without further ado, let's get started.
At least 50% of the carbon emission reductions we need to reach our global targets must come from energy efficiency. That's 3 times more than renewable energy can deliver. Thermal Energy is an innovative clean tech company. We make our customers more profitable and competitive by reducing their fuel use and reducing their carbon emissions. And we do this by developing, designing, and implementing turnkey energy efficiency projects using our own proprietary technology. 50% of industrial energy use is lost as waste heat. So most of our customers are literally having dollars go right up the chimney. We help them by saving up to 80% of that lost heat. The demand for energy efficiency is increasing, and it's increasing because energy efficiency is the fastest, cheapest, and easiest way to reduce our carbon emissions. And the reason it is because it actually saves money rather than costs money. Our key customers tend to be large corporate energy users, usually Fortune 500 or other large multinational customers. Over the last few years, we've more than doubled our sales and engineering capabilities in both North America and Europe. We now have strong established teams in both markets delivering compelling energy efficiency projects for our customers. We've got a unique, strong, and young team. We've got the right products in the right place at the right time to continue growing both organically and by acquisition. So before we go any further, I need to point out that today's earnings call may contain forward-looking statements within the meaning of applicable securities laws. And forward-looking statements are, as always, subject to risks and uncertainties, and undue reliance should not be placed on such statements. Certain material factors or assumptions are applied in making forward-looking statements, and actual results may differ materially from those expressed or implied in such statements. For additional information, please refer to our financial statements and our management's discussion analysis for this quarter and other filings with the Canadian Securities.
Okay, now that you've understood what Thermal Energy International is about, we've gone through the disclaimers. Let's get to this earnings call. Hit me up in the chat. And again, afterwards, I'll be sticking around to look at some numbers, give my opinion, and then answer any questions.
Highlights for the quarter include revenue increasing 8% to $6.1 million, driven by continued growth in turnkey heat recovery projects. We had EBITDA of $322,000 and net income of $44,000 for the quarter. During the quarter and over the last couple of quarters, actually, we have made a number of significant investments in the future growth of our business. These investments will have a temporary impact on profitability and did lower our EBITDA and net income for the quarter. And I'll discuss these investments a bit in more detail in a few minutes. We also received orders totaling $8.3 million during the quarter, and we'll also talk about our order intake a bit later in the call. Now, when we talk about investing in growth, let's take a little bit look at that to see what that means. We've made a number of investments in growing our business. On the people side, we've added 9 new people in the first 9 months of fiscal 2024. That includes 6 people in sales and marketing, 2 in engineering and production, and 1 finance person. And the finance person position is directly related to our new enterprise resource planning and accounting system that we're implementing. On the technology side, we're currently investing heavily in what we like to call architecture for growth. First, we're developing our carbon reduction and efficiency scoping tool. We like to call that CREST. This is a custom developed mobile app which will allow our sales and engineering teams to quickly and efficiently identify potential energy savings and carbon reducing opportunities while on site with the customer, sometimes during the very first visit. This is especially useful given the increasing number of solutions we can provide our customers. And secondly, we're also investing in new global accounting program and ERP software so that we can more efficiently scale the business going forward. Finally, on the plant and premises side, during the quarter, we moved our UK operations to accommodate increased demand for our products, in particular our GEM products. So we had additional rent, moving costs, renovation expenses, all related to the move in the quarter. Importantly, our new UK production facility is more than 2.5 times the size of our old space, and it allows us to more than double throughput capacity compared to our former premises. So that's very exciting for the team. Revenue on a trailing 12-month basis for the quarter. So taking a look at how our business has performed over the last 12 months, ending February 29th, 2024, we had revenue of $26.6 million. This is our highest 12-month revenue on record. It's about 26% higher than our annual revenue for fiscal 2023, and it's an increase of 75% over the past 2 years. Over these past 2 years, we've had very strong growth in both the custom equipment and the turnkey projects side of our business, with custom equipment being up about 93% over 2 years and turnkey projects about 60% during that time. Our EBITDA for the 12 months ending February 29th was $2.7 million, which is a 240% increase from a year ago and is up $3.7 million over the past 2 years. I'll emphasize again here that our expenses were significantly higher during the most recent trailing 12 months as we invested in future growth. The investments in growth that we highlighted back on slide 5 totaled about $1.5 million in the first 9 months of fiscal 2024. And in addition to these investments in the growth of the business, we also had some realized and unrealized foreign exchange adjustments that also increased expenses by about $600,000 compared to last year. So despite about $1.1 million in growth-related expenditures and a $600,000 impact from foreign exchange adjustments, our trailing 12-month EBITDA was still $2.7 million. Net income was, of course, also impacted by these same factors, investment in growth and foreign exchange adjustments. But despite this, our trailing 12-month net income was still $1.7 million compared to a $400,000 loss for the prior 12 months, and was up about $3.5 million over the past 2 years. I'll point out that Q3 of fiscal 2024 was our 5th straight quarter of positive EBITDA and net income. Turning quickly to our balance sheet, at the end of the quarter, we had cash and cash equivalents of about $7.5 million and working capital of $3.4 million. For reference, at the end of May 2023, we had cash and cash equivalents totaling $3 million and working capital of about $3 million. While we don't provide guidance, these next few slides will help demonstrate some strong momentum that we're seeing in the business. This slide shows our order intake on a trailing 12-month basis as at the end of the third quarter. As you can see, for the last 12 months ended February 2024, we received $29.6 million in orders, compared to $25.7 million a year earlier and $13.7 million at the end of Q3 2022. The $29.6 million over the 12 months is an all-time high for us and represents a 2-year increase, as you can see on the slide, of about 116%. We received $8.3 million in the third quarter alone. A few of the more notable orders received would include a $3.7 million turnkey heat recovery project representing a repeat business from a multinational branded private label food and drink producer, a $540,000 order from a Fortune 500 food processing and commodity trading company for 8 heat sponge boiler economizers. That's the largest single order in Boiler Room's history. and a $1 million order from a privately owned meat processing plant in Europe. And this was our first order for our new hybrid flue ice, which is quite exciting. As could be expected, our order intake has resulted in a strong increase in our order backlog as well. At the end of Q3, our order backlog stood at $20.4 million, up from $16.2 million a year earlier and up 264% over the past 2 years. The $20.4 million at the end of Q3 was also our highest quarter-end backlog ever. As a reminder, order backlog represents the amount of purchase orders that have been received but not yet reflected in our published financial statements. In addition to order intake and order backlog, activity pertaining to project development agreements, or we call them PDAs, is an important indicator of momentum in the business and a key metric in assessing the strength of our business development pipeline. With a PDA, a customer has agreed to pay us to fully develop the project. This is usually based on a preliminary project analysis and project value statement that we've already provided to the customer. So they've seen it, they like it, they want us to develop it further, and hopefully eventually implement the project. At the end of the quarter, we had 31 projects in paid development with customers. Again, this is a record high for the company, and this is despite a record order intake for turnkey projects over the last 12 months. At the end of Q3 of fiscal 2022, we had 18 projects in development, so you can really see the growth and momentum since there, a 2-year increase of 72%. And although there's no guarantee that a signed PDA will result in a final turnkey project order, the increase in PDAs demonstrates the growing demand for our carbon emission reduction and energy efficiency solutions from our Fortune 500 and other multinational customers. Looking ahead, we plan to continue to focus on our track record of profitable growth, both organically and through accretive acquisitions. Anyone following our stories knows that we do a substantial amount of repeat business with large multinational companies, especially our top 10 corporate accounts. These top 10 corporate accounts alone, we have significant opportunities ahead of us. In fact, we believe we have only about a 5% penetration rate with these customers so far, who combined have about 1,000 sites worldwide. More and more large companies have publicly stated their aggressive carbon emission reduction targets, and about 90% of industrial energy use is thermal energy. This bodes well for us because improving thermal energy efficiency is the fastest, cheapest, and easiest way for our customers to reduce their carbon emissions and meet their carbon reduction goals. And according to the International Energy Agency, the global investment in energy efficiency needs to triple by 2030 if we hope to achieve our net zero by 2050 goals. So, in summary, we've reestablished our track record of growth, achieving record levels of revenue and profitability. Since the end of our last fiscal year in May 2023, we have invested more than $1 million in the future growth of the company. And we have strong momentum in our order intake, order backlog, and project development agreements, all at record levels. So this concludes our prepared remarks. We would now like to open the call for questions, and I'm going to turn it over to Trevor Heisler at MBC Capital Market Advisors, who will moderate our Q&A session. Please go ahead, Trevor.
Thank you, Bill. If you are a qualified equity analyst joining us on MS Teams and would like to ask a question, please notify me by using the raise your hand feature. Here first, let me pause and see if we have any questions. So Bill, it looks like one of the analysts that was going to join the call has not been able to. He did provide us with a couple of questions here. I'm going to read through them for you.
Okay, sure.
Your first question, are there any geographical sales trends you would like to call out?
Yes and no. I mean, for a couple of years now, we have expecting European growth to exceed North American growth. And I think we are starting to see that. Certainly last year, the European revenue was higher than North American revenue, but this year, North America is coming back as well. So having said that, we do expect over time to see the revenue in Europe exceed levels in North America. And that's primarily driven by fuel prices and energy prices. They're much higher in Europe. And Europe tends to have more stringent carbon reduction goals as well. So I think we'll continue to see further growth in Europe. And a lot of the team that we've added over the last year, the 9 people were referred to, a lot of those have been in Europe at least.
Okay. Can you give us a split on the turnkey versus custom equipment revenues during the quarter? Is revenue from turnkey projects growing as a percentage of revenue?
It is growing. So for this quarter, turnkey and custom equipment, we're about 50-50. And that's a switch from last quarter and last year when it was about 1/3 turnkey and 2/3 custom. If you recall, again, if you've been following the story for a while, pre-pandemic, we were 2/3 turnkey and 1/3 custom equipment. But the pandemic really had a significant impact on our turnkey business. The custom equipment business continued to grow throughout the pandemic. And now turnkey is growing as well. So yeah, turnkey is growing on an absolute basis and as a percent of revenue. Turnkey revenue is about double what it was last year on an LTM basis or a trailing 12-month basis. It's not quite at pre-pandemic levels, but turnkey order intake is at record levels. So turnkey order intake is already exceeding the levels, the record levels that we had pre-pandemic. So yes, in short, the percent of revenue that's represented by turnkey is increasing and turnkey is growing very nicely.
Great. Can you talk about the M&A environment? What kind of opportunities are you looking for, and how competitive is the bidding for those targets?
Yeah, it's always competitive anytime you're in M&A, and but we're looking for companies that fit comfortably with us, as we have done in the past. Ones that make strategic sense for both us and perhaps for the shareholders of the target company as well. Historically, we were always very interested in new technologies, and so we've grown from one technology, the FLU-ACE technology, when the company was founded, to currently about 10 technologies. And that new technologies and additional technologies will still be a part of our focus. But I want to emphasize, we're not looking for pre-revenue. We're not looking for early stage. We're always looking for proven technologies with revenue. But I think maybe what we would be even more or slightly more interested now would be distribution. We've got a good suite of technologies, and if there was a way that we could leverage our distribution, perhaps acquire a company that had exposure and penetration in either a vertical market or a geographical market where we don't have a lot of presence, that would make a good acquisition for us as well. So we continue to look, and there's lots of companies out there that are sort of in the sector, and so we will continue to look, and hopefully we'll be able to find something to add to the business.
What kind of multiples have you paid in the past for acquisitions, and do you have a target range of sorts?
I don't have a target range. I mean, the most important thing is we want an acquisition to be accretive to our shareholders, and so that's the most common. I think historically it's been about 1x revenue that we've paid, but we don't really have a target because it's very specific on the opportunity.
And the last question that was provided to us was, how much of the backlog is scheduled for completion over the next 12 months?
I would say most of it. I mean, almost all of it. We generally, when we get orders, we expect to revenue them in the next 12 months. That doesn't always happen, with some of the large big turnkey project orders. Sometimes it will take a little bit longer than 12 months to do the final 5 or 10%. But generally speaking, 100% or very close to it of our backlog is usually revenued in the next 12 months.
Okay, Bill, that's all we have for questions at this time. Please go ahead.
Okay, well, I just wanted to thank everybody for their time and attention. We were excited to do this, and we look forward to seeing you next quarter. So You can always get more information at www.thermalenergy.com or reach out to us via the investors email. Thanks so much.
Okay, that's that. Let me share this screen here. I had a technical issue to start this program. As you could tell, I was a little bit late. There we go. That should be working. I need to start out with my own disclaimer. I'm going to look at some numbers and give a little bit of my opinion about Thermal Energy International. Do not forget, I'm just here to introduce stocks, introduce companies to investors, and let you do your own research. So none of this is financial advice. I am not your financial advisor. I'm just having some good communication about these companies, making sure that you get the information that you need to invest. Fascinating day for Thermal Energy International. They were down to, I think, 20% down at one point today after earnings came out. Just before I recorded this video, I took this picture. I'm not sure what they're at right now, but 29 cents basically Canadian is what we're looking for a price. They had a little bit of running up into earnings here. We had a really nice run. What was that, 35 cents or so? And earnings seems to have disappointed people. It's down just recently, but I mean, overall, this company has, made a lot of money for people depending on where you bought in. But there seems to be a battle going on with earnings between two different groups of people. So one of the things, obviously, that I think has dropped the share price, if you look at this one quarter, just this quarter that we're in, right? We've got revenue is down $6 million, less than 6.1. That's down from previously 7.1. They've had other quarters here of 8.2. So revenue is down. I'm sure that's what's, spooked people a little bit. When you get a microcap stock that's down on revenue, that's not something you want to hear. Because of that, their gross profit is also down. That's kind of the red flags for this quarter. Margins are still pretty steady. And then, of course, I think we could ignore this, right? Did he not explain that well enough? Yeah, EBITDA is down and net income is down, but he talked about why they're investing for growth. So we could explain that a little bit. So yes, I mean, revenue being down is not something that people expected, obviously, and they decided to sell the stock. But one of the things that we need to look at too, a lot of these microcap companies, if you've never been a microcap investor before, you could see lumpiness in their quarterly revenue, right? 7 million, 8 million, 5 million, 3 million, 4 million. What you're looking for is a trend. You're looking for trends in the right direction. That's what I've always gauged this on. Right now, like I'm covering Kraken Robotics. Kraken Robotics has been my #1 pick on this channel for about 2 years now. And they were actually, I was covering them when they were making about 3 million a quarter. Some quarters they had 5. Other quarters they would bounce up to about $10 million. Everybody would get really excited, and then the next quarter they would dip again down to 5. Right now, Kraken Robotics just put in a quarterly revenue of $27 million. So if you can, sometimes try to look into the future a little bit, where this company is going on an annual basis. That's why they reported all of their numbers on that presentation as trailing 12 months and trying to not look at the quarterlies, which can be a little bit lumpy, right? I actually pull up this slide a lot recently. I'm going to be using this a lot more in 2024. Skating to where the puck is going to be, not where it has been, right? So some people are concerned about kind of the lumpy revenue. Revenue is down this quarter. I'm selling, I'm out, I'm done. Other people are saying, look, we're looking into the future. We're looking at the trends. We're going to where the puck is going to be, not where it is today, right? So those people that are a little bit more bullish on TMG and are, saying that they're buying the dip today are looking at the cash, because despite the revenue down, the EBITDA down, and the net income down this quarter, which a lot of that was going towards growth for the company, cash position is up quite a bit here, right? 7.5 million in cash, up from the same time last year of 3 million. Deferred revenue, and that's why sometimes these smaller companies have these lumpy quarters. So deferred revenue from last year has gone from 2 million to basically 6 million. It's tripled. So you look at, the revenue is down from last quarter, 1.1 million, I think it was, a little bit less than that maybe, but their deferred revenue is $6 million. So timing on 1 or 2 contracts, and all of a sudden this is another growth quarter. Unfortunately, that did not happen for them, as well as they're paying down some of their long-term debt consistently over time. So that's pretty good, right? Some of the other numbers I have to show here, Net income, obviously, inflection point. I'm getting tired of saying inflection points, but typically when we're looking for these tiny companies, we're looking at a time in their period, with share price changing, where people want to make money, where they're going from being not profitable. And this is before anybody was looking at Thermal Energy International. And now, as you can see, the first 9 months of 2024, $691,000 in net income. So that's quite the change. That's quite the inflection point, as well as you have to look at net cash provided by operating activities. So cash is king, right? Ignore all those other expenses for growth and everything else. We're all looking, or I look at cash. I shouldn't say we're all looking at cash. That's maybe too much of an assumption. But the cash provided by operating activities, 2023, 2.3 million in 9 months. And so far this year, 5.6 million. So their cash position has more than doubled in the past year. That's a significantly growing company. As I discussed, up to $7.5 million, which is, like I said before, it's interesting they're talking about acquisitions. I can't really look at this company and see where acquisitions would come from. So that would be an interesting question for the CEO or somebody a little bit more experienced with this company. I'm not sure how easy it is for them to acquire other companies, but with $7.5 million in cash, that's definitely possible. Now, one of the reasons I'm not going to give a star rating for this earnings, normally I do 0 to 5 stars, what I think. There's too many numbers to go through here. There's too many numbers. This is the first earnings call from Thermal Energy International. Revenue is down a little bit, and but we've got all these deferred revenue relating to contracts. I need to go through these numbers before I can give a star rating. So I think other people should go take a look as well. And then, of course, we understand why the EBITDA and net income was down a little bit for growth. So not giving a star rating, but that's basically everything I know about Thermal Energy International today. That's a little video on their call. That's a little earnings call, 16 minutes of earnings call, and then that's a little bit of my opinion. So I hope you enjoyed that. I need to change this video name to Everything You Need to Know About Thermal Energy International, because that was a lot of information. Yes, 22% down was crazy. Yeah, at one point, like, I was up this morning recording that earnings call, looked at the numbers briefly, thought, okay, this looks pretty good, right? I wonder how people will react. Straight down, right? And then it's been a battle all day. It's fascinating now because it's closer to lunchtime for me. And I've been watching people all morning, right? The one side saying, look at the numbers, I'm out. And then the other side saying, yeah, I'm looking at the numbers and I'm buying more. So it's definitely been quite the interesting day for Thermal Energy International, right? Especially after having their first conference call and then seeing their share price kind of rocket down like that. But I hope that gives you a better idea of kind of why, at least in my opinion, what's going on. And a quick peek at the company, a quick listen to that conference call, and then, kind of my opinion. I'm not done today. I'll probably have one more video. I believe Atlas Engineered Products is releasing soon. I believe BQE Water is releasing soon. I am a busy person. Recently, I have coming up soon probably NTG Clarity Networks, Payfair. It's microcap earnings season. I hope you enjoy these videos. I am going to close this down and get ready for my next one. So thanks for watching. I appreciate your time, and I'll see you again.